It's 9:14 a.m. here in Paris, a reminder of our headlines this hour. The clock is ticking down to the first round of France's presidential election, with the major candidates ramping up their campaign efforts in a vote that's still too close to call. And even more of us have to come out. The words of the Venezuelan opposition leader as the country gears up for yet another round of mass anti-government protests. This a day after 2 protesters were shot dead, as hundreds of thousands of people took to the streets, calling for President Nicolas Maduro to step down. It's time now for a business update, and joining me is Stephen Carroll. Hi, Stephen.
Hi, Haxie.
Starting in Venezuela, and as those massive anti-government marches continue, there's been trouble too for General Motors.
The carmaker says that Venezuelan authorities have seized its plant in the industrial hub of Valencia. The factory was shut down while cars and other equipment were removed, according to a statement from GM. The firm says the seizure is causing irreparable damage to its business and the more than 2,600 workers it has in the country. It's vowed to take all legal action to defend its rights. Venezuela's car industry, like many others, have been suffering from a lack of raw materials. Ford last year decided to halt its production in the country, I should say.
And Stephen, can you tell us what's happening on the markets today?
Lots of focus today on the price of oil after we saw it slump in trading on Wednesday. That came on the back of a new report showing that US oil stockpiles were larger than normal for this time of year. There's somewhat of a bounce back, as you can see in trading today. Brent crude, the international benchmark for oil, back up over $53 a barrel. We've just had comments from Saudi's oil minister saying, though, that oil producers might have to extend their production cuts. So that's obviously playing into oil market investor minds as well. On the stock markets, oil and gas producers are the biggest fallers as European trading gets underway. London, Paris and Frankfurt all opening in the red today. Booking the trend, though, the French advertising firm Publicis, their shares up 2% in Paris after their latest results. Over in Asia, the oil prices were also dominating trading there. The Nikkei in Tokyo finishing the day just slightly under the flat line there. Investors digesting news that Japanese exports rose by a faster than expected 12% in March. I look now at some more of today's business headlines for you. The French drinks company Pernod Ricard has warned that new restrictions on alcohol sales in India will continue to hurt its business. The firm, whose brands include Absolut Vodka and Jameson Whiskey, says sales fell by 4% in the Indian market in the first 3 months of the year, hit by the government's decision to ban alcohol selling within 500 metres of national highways. Globally, Pernod Ricard saw sales rise by 3%. And the consumer goods group Unilever has reported a 6% rise in revenues for the first quarter. It's hiked dividends by 12% as it tries to boost profitability with a share buyback and selling off brands like Flora. The company's quarterly report made no mention of the failed takeover attempt by the firm Kraft Heinz.
And turning to Argentina next, and a bitter dispute over lemons.
For 16 years, Argentine lemons were banned from the United States over fears of disease. But a move by former President Barack Obama to end the embargo has been halted by Donald Trump, leaving producers in Argentina wondering if the deal has soured. Anka Ula has more.
Sweet victory was short-lived for these Argentine lemon growers. Hopes that a 16-year-long ban from U.S. markets would be lifted were dashed, as President Donald Trump froze a decision made by Barack Obama that would have finally let Argentine lemons in. In 2001, a California court banned the lemons after complaints were filed by California producers saying the fruit were diseased. But the USDA has since said the lemons were safe to import, which leaves many growers in Argentina to believe the stay is more about Trump protectionism than safety standards.
I think we're up to meeting whatever requirements and will be able to comply with whatever expectations they have. But right now, we're held up by this political impasse. They're not letting our product enter. But we're still very optimistic that this situation will sort itself out quickly.
Argentina produces 1.5 million tons of lemons every year, with 95% of them being sent outside the country. Access to the U.S. market, the world's biggest consuming market, would open the door to markets in Asia, with huge growth potential for the industry.
Obviously, we're very interested that this decision be reviewed and fast for those who managed to assure the opening of the US market for Argentine lemons. So this is something that's actually put in place, because we're well aware that this is a very important opportunity for exporting, for employment for so many Argentines.
The issue of reversing the lemon ban will be high on the agenda as Argentine President Mauricio Macri meets with Trump in Washington next week.
And next, Stephen, apparently Facebook wants to read our minds. Tell us more.
Terrifying, the thought. The social network is working on a way to allow users to type with their minds rather than their fingers. That's the plan, at least, announced at Facebook's developers conference. There are more than 60 scientists working on the project for the company, which aims to find a way to type 100 words a minute through just thought. Facebook says the optical imaging technology will only be able to read the thoughts that users want to share, luckily. Regina Dugans, the head, is in charge of research at the project. Let's listen to what she had to say.
What if you could type directly from your brain? It sounds impossible, but it's closer than you may realize. And it's just the kind of fluid human-computer interface needed for AR. Even something as simple as a yes-no brain click would fundamentally change our capability. A brain mouse for AR.
I'm not quite sure how I feel about that one just yet. Finally, for me, a retail landmark is set to disappear from New York's Fifth Avenue. Apple is taking down its giant glass cube from outside its flagship store. The City of New York has issued a permit for its removal. It's going to cost the iPhone maker $2 million. Apple's currently renovating the Fifth Avenue store. It's relocated to the building next door while those works are ongoing. Now, Apple is generally one of the US's most successful retailers in terms of sales per square foot of shop. It's in the process of redesigning all of its stores, with retail chief Angela Arendt in charge. She moved to the company from the British luxury brand Burberry, so knows a little bit about luxury experiences.
I'm sure you do too, Stephen. Thank you very much for that business update.